Hello. Sorry, a little delay here. Hope everyone is doing well. It is Tuesday, September 24th. And yesterday we had one of the weirdest slash worst days in terms of price action I've seen in a very long time. There were a few key areas that traded, but overall, just disgusting behavior, getting trapped. What was interesting on yesterday's session was that even though we were kind of grinding to the downside at one point, every time the opportunity for a big buyer to come in came in, right? And a big buyer kept just bidding, 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 bidding. There was a little more bullish nature to the order flow from yesterday, and as a result, we've tried to make a little peak very, very close to the all-time highs on the overnight here on the S&P 500 before settling down. And right now, we're trading at the top band of an auction. So we'll talk about that. We'll talk about how a potential trade plan sets up for the day. Just using one single level. I'm just going to be using one level today to see how we can gauge the momentum and movement of this market. But before that, let's talk about some of the news. We have some news out of China. Right, Chinese central bank policymakers have come out swinging. The PBOC on Tuesday slashed its reserve requirement ratio to the lowest level since at least 2020, as well as trimming its main short-term interest rate. And the package also targeted the nation's uh, property market. Right, its property market's been in a tough standing right now, and it's being targeted. So with measures to lower overnight mortgage costs and to destocking program that eased rules for second home purchases. So it's all being aimed at getting the country's growth back on side, right? The trajectory of that growth, they're looking to continue that momentum, or I guess get into that momentum back to reality. So a series of downbeat data has revealed a weak consumer and long deflationary streak amid mounting debt problems and a spiraling property crisis that's been going on for quite a while now. Remember Evergrande. A strong post-COVID pandemic bounce has never materialized, with worries about job security and much attention shifting to exports given the weaker domestic economy. So it's also important to note the timing of the monetary stimulus package, which is aimed at restoring confidence and may help China approach its full-year growth target of around 5%. A week ago, the Federal Reserve also initiated a new easing cycle with a pretty big 50 basis point cut to start things off, potentially giving the PBOC some room to ease in the face of deflationary pressure. And it also likely been hesitant until now as higher American interest rates generally weaken foreign currencies, and if going at easing alone, China could have witnessed capital flight to the US. So Chinese investors naturally applauded the latest stimulus blitz, which included a $114 billion of stock market liquidity and allowed funds and brokers to tap central bank facilities to buy equities. China's blue chip CSI 300 index soared about 4.3% on that news after falling to a 5-year low this month. That's crazy. A broader Shanghai composite on the Hang Seng also advanced significantly, climbing around 4% by the end of the session. So interesting stuff going on there, easing all across the board, trying to revive certain aspects, and realistically, it doesn't look like it's going to end too well, but that's for the future to decide. So we'll see how that kind of shapes up. It was a similar situation over in Japan, I guess, from that perspective of seeing some decent declines and attempted revival as of recent. Um, in terms of other news, right, let's see what else we have here. We have some news out of Visa, right? The Department of Justice is reportedly planning to file an antitrust lawsuit against Visa, alleging that the company illegally monopolized the U.S. Debit card market. The news sent shares down 2% pre-market today. The lawsuit from the DOJ Antitrust Division also claims that Visa entered into exclusive contracts to hinder the growth of rival payment processors and block technology firms from entering the market. The case is a result of a sweeping DOJ investigation launched over 3 years ago into potential anti-competitive practices in Visa debit card transactions. We also have some news out of Boeing, right? The best and final contract offer will not be put to a vote by its largest union this week, as negotiators claim the proposal was made public without any discussion and does not go far enough to address workers' concerns. The plane maker sweetened its offer to include a 30% pay hike and a $6,000 ratification bonus and reinstatement of performance-linked bonuses. Your negotiation committee did not have any input on the offer, the union told its members. And separately, nearly 5,000 workers at Textron, aviation unit have gone on strike after rejecting this offer. So yesterday we saw the epitome of just a balanced market and sideways chop. It seemed like almost a half day. Maybe I preemptively spoke that into reality. As I was mentioning, it was a holiday in Bulgaria. Not that that has anything to do with the markets, but today pre-market, Japan's up, Hong Kong is up 4%, China's up 4, London's up 4/10, Paris up 1.6, Frankfurt's up 8/10, S&P's up 0.2%. Dow Jones up 0.2, Nasdaq up 0.3, crude oil up nearly 3%. And we have some news. So yesterday we had some Fed speakers. We continue with the Fed speakers. Right now, Fed's Bowman is speaking. There's no other Fed speakers that I can see on tap today. But into the end of the week, we have Jerome Powell coming on the wire pre-market on Thursday, as well as the PCE, Fed's favorite inflation gauge pre-market on Friday. So let's take a look at these markets and how they're kind of shaping up over here with the S&P. Yesterday, sideways, chop, 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 chop. But we've held the prior overnight value. We've also held higher lows continuously, and we've made a little attempted burst above this 82-84 area on the S&P 500, which is the top band of this current balance. So the flight for a new all-time high is still in the cards as long as we maintain above this like low to mid 80 area. That is just the one singular level that I'll be interested today on the S&P. If we get offering aggressively below, I think the shorts can take this down potentially back into that mid 40. But right now, things are looking strong for that buy side and that momentum continuation. So if we can get more expansions and these guys hold that mid low 80, I like to see a new all-time high, right? Maybe 5,800 is in the cards. It's not that far away for today's session. Nasdaq's still struggling a little more, so we have to get a little aggressive on the rally on Nasdaq to see this thing kind of continue and manifest across the board. One of the big factors here to wrap this up is that I was looking at some of the tech names yesterday, right, and they weren't looking too sexy. Apple's trying to gap up right now, but there was weakness pretty much across the board on tech yesterday, while prices were still generally pinned with underlying buyers coming in on the order flow construct. We have Microsoft that was down as well yesterday. Nvidia was down a little as well yesterday. Google down as well, and we're having a little gap to the upside. One of the only ones was Tesla that was springing to the upside, gapping up very nicely. Amazon was holding a rally as well yesterday. So the majority of tech was down, which is an interesting factor to mention. Going into kind of a sideways all-time high blitz into the S&P. So today, do or die, hold the mid-80s or don't. That's what's going to differentiate us between an all-time high and honestly probably a larger failure if we can't do that. If we get another day of just chopping sideways movement, hands off, right? I just want to trade my key areas, and that's all I really care about, and then we'll go from there. So remember, check out community.tradeprocamera.com. This week at some point we'll be streaming in Discord, so I'll see you guys there. And